Hey everybody, good morning. Goose, going mobile. Have you been home for the last like 3 weeks, dude? I ain't mobile every day. Lieutenant Colonel, good to see you. Craig, Don, Rob, Will, Ed, David, Sven Moore. Oh gosh, excuse me, Matt. White Monster, getting me there. Mad, Andrew, Ed, Hugh, Ivan, Gary, Jason, Craig, Kevin, JB, Barbara, Diane, Serge, Terry, Ted, Scott, Marianne, welcome everybody. All the channel subscribers like Douglas, Piet, Mark, Garneau, Larry, good to see you too. Welcome to the show today. I'm your hostess with the mostest at sometimes getting lucky. Welcome. We have this potential midnight tonight, I guess. It's that magical time of the year. Not Christmas, not Super Bowl. Government shutdown season. That time when, we can't seem to decide on a budget and might shut everything down. Does it really matter? I mean, the elected officials we have decided to play the high stakes game of chicken with the economy and all the things that happen. I mean, the risk here, think about this. Now, typically, as I've said, government shutdowns, typically kind of bullish for the market. That's historically, especially after it all gets resolved. We've not really had any major crashes started by government shutdown. But the caveat here, this time, all of our GDP growth, basically, from 2022, has been on the back of government spending. If we actually looked at the economy without government spending, maybe we've been in a correct contraction for several years. What does that all mean? Opportunity, baby. Now, you might be thinking, government shutdown, this sounds pretty serious. Well, you're right. It is pretty serious for the poor souls who have to depend on the government or who booked a vacation to a national park. But for us, the savvy investor, another episode of our favorite reality TV show, Washington's Got No Talent. So the plot twist, always the same. Two sides, they don't agree on anything, right? They posture, they point fingers, they blame each other, they go on cable news, the sky's falling, the last minute, strike a deal, or they don't. It's the drama that plays out. It's almost more predictable than a Hallmark movie. But here's the twist in this year's episode. This time, a little different. We've got a former president who's now a current president, I guess, threatening to not just furlong federal workers, but to let them go completely, permanently. It's like a spicy new ingredient in our showdown stew. And the real kicker here, the whole charade is happening right as a massive market propping financial instruments, the JP Morgan collar, is set to expire. Think of it as a giant safety net under the market, and today, September 30th, is the day that it goes away. Right as the clowns in Washington are playing with chainsaws. Maybe tossing them back and forth. So, what could this mean for us, right? Volatility, number one. It means the market could get a whole lot more interesting. More interesting, more opportunities. So, VIX, the star of our show. This is where I made about a third of the money during COVID. And it's kind of the market's fear gauge. It was creeping up yesterday. It's kind of been in a coma for a while, but when shutdown drama kicks in at full swing, probably going to wake up. I saw a $12 million 2-block order go through yesterday at 32 strike out to November. That's a bunch of money. Somebody spent $12 million buying those 32 strike calls on VIX. $12 million. That hedge, I don't know. When it does wake up, though, you want to be holding the right tickets to the right show. So, talking about volatility ETFs potentially is a way to play. This is how I played it last time. UVXY. Right now, I mean, UVXY is a declining asset. It grinds lower because volatility doesn't trend. It spikes and then comes right back down. So UVXY over the long term bleeds off. And you could buy some UVXY right now. It might be a lottery ticket in your favor. Next, the classics, the old reliable, the safe havens, ways to play when the world gets crazy. Where does the smart money go? Well, flight to safety, American Tower, AMT. It's a real estate investment trust. Another one, gold. And we're not talking about buying gold bars and digging them in the backyard. We're talking about potentially some gold miners that have been outperforming right now. SSR mining, things been on a tear. Kind of like finding a Rolex in a garage sale. And of course, we have defensive plays, companies that sell things people need. When the government's on vacation, think about it. You going to stop eating cereal because politicians in Washington can't agree on some numbers on a paper? I don't think so. So, opportunities for just normal, good old stuff, you know. The guys who make your breakfast could be a solid bet. Post Holdings, Kellanova. People always need their honeycomb. Maybe their Cheerios. General Mills. Anyway, let's not forget about utilities, right? The lights have got to stay on. American Electric Power, boring name, but in times like these, boring's beautiful. Pay a nice dividend, not going anywhere. So when things are uncertain, you can bet on the things that you can count on. Now, while the talking heads on TV are wringing their hands about the end of the world, potentially we can make money. Now, remember, every time we've shut down before and we resolve, we throw more money at it. You know, they get a vacation, they get a back pay, they get bonuses, all that money flows out in the economy, and we go higher. I'm kind of looking forward to all this. Yeah, if we do shut down, may it be short-lived, maybe messy, and give us lots of opportunity. That's what I kind of hope for. I'd love a big, beautiful pullback. Anyway, so there's some ways to play. David, you shouldn't talk about her that way, bro. Happy anniversary. She's a serial killer. Anyway, we know the right kind of cereal, the good kind of cereal, right? Anyway, oh man, all trading involves a substantial risk of loss. Even if you take any of these things I said today, you might lose money. Just because I predict things might come true. I have no big hedges right now. If I add anything, I'll let you know in Discord, at least Termite Trading Lab members, and maybe the broader group if I feel like it. I mean, I feel like it's necessary. This presentation here is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money trading any of those instruments, and if you need personal financial advice, hire and consult a financial advisor. That's where we are, everybody. Welcome to the last day of Q3. Last day of the third quarter. If you don't have your EV purchased today with some money down on the table, the tax credit is no more. So that's what we got. As far as the calendar goes, this week's pretty benign. Last day of the quarter. Tomorrow starts the new one. One interesting thing that I saw yesterday, if we shut down tonight at midnight, these numbers are not getting released on Friday. If the government stays shut down, they're not gonna. The BLS said we're not gonna put those out. We're not gonna put out any numbers until the government opens back up. So that could be interesting. So we'll be left adrift without any kind of economic numbers. But then what's crazy about all that, if we stay shut down for a prolonged period, a few weeks, and all that economic news drops at once when we reopen, that'll be some chaos. Absolute chaos. Because then we'll get like mixed signals and it'll just be, I can't even fathom what it would be right at the moment. So then we got the big show coming up at the end of the month. Dun, dun, dun. Next rate cut. Right there. Right in the middle of earnings. Never a dull moment. That's only 1, 2, 3, 4 weeks away at this point. October should be fun. That's what the bottom line up front is. October should be interesting. Salah. How we doing this morning? Get a little pullback. It looks like it's turning here, kind of tagging that 450. I don't know who might have said that 450 was probably resistance. Anybody in the audience remember? Well, there we go. Found some resistance, and we'll see what happens. As far as overnight action goes, a little soft, little just kind of pulling back here. So was this a giant ABC? Could be. ABC, right into those proportions there. Could be. We tag if that was in fact A, B, C. We stopped right at the corrective proportions. And I know my little doodad snapped off of that. All right, magnet off, annoying the fork out of me. We stopped right at that. Doesn't matter where I put those little boogers. We're still right there at the corrective A, B, C proportions. Now, that looks a little bit like a 1, 2 right there. 3 potential, 4 potential, 5 potential, which can result in at least a 618 retrace. So what do we need to watch near term? And this is now, you see all these candles. Why am I looking at futures? Something you've probably never seen before. Because when you pop over here, this little move had virtually no overnight action. And we're getting a little big gap down here. A lot more candles, a lot more data right here. So I'm looking at this high right here from pre-market yesterday down to this low right here from overnight last night at 3:30 in the morning Eastern time. And this 618 level right there, along with the buffer zone above and below it. Right there. This is the zone we need to get through. Now, once we cross that number right there, odds are we're going on up. At least in the short term 2-day picture here. We're actually barely over 24-hour picture. So this is an important level right there. Alrighty. So I don't think the government shutdown matters a hill of beans, really. I mean, you could say, oh, it brings chaos. Yeah, chaos is good for making money, though. It presents opportunities. the glass half full, glass half empty. Glass is 50% H2O, 50%, 40% nitrogen, 10% oxygen, however that goes. Anyway, that's what we're kind of watching here in the near term. This is why ES, why S&P. It's kind of a big broad brush of the economy. Now, in Q, same kind of situation, same kind of proportions, although it's a little different story. Just a little different story here. We had the low, had that high, we had that low, and we breached up above the 1272. And on this pullback, we have not overlapped that high. Potential, that could be a 1, 2, 3, although very shallow. We can see this be a 4 and this turn into a 5. And we could get an extension. The only thing this, the 3 meets the criteria because it is bigger than wave 1, so it's not the smallest wave. Now, typically wave 1 and wave 5 are equal in size, but 5 can extend and be much bigger than even 3. So it's what I got my eye on right now, and that right there, everybody, is the all-time high on NASDAQ. Big tech. So we could lift this baby off, make some new highs. ES, same kind of situation, but the high we're dealing with right now is this one. And that point right there and that point right there have overlap. Less awesome. So that's causes some doubt in my mind about where we're about to go. Higher or lower. Just uncertainty. You have to decide for yourself. Is in Q, since, the Mag 7s plus a handful of other stocks, like 4 or 5 other stocks, have been responsible for like 60% of the gains since 2019. Is that index more indicative of what the actual market is doing right now? I don't know. You have to make that decision for you and your account and your positioning. Russell here, little different story we've got cooking here. It looks like we're setting up for a bigger, deeper correction. A, B, C continuation style. So short term, next few days, we may see small caps giving it back just a little bit here. Put us back down in this vicinity right here. If we get the continuation lower. That could be out here sometime next week. Right there. Alrighty. Oil, Earl. Look at that. That was a beautiful back test of the resistance at a lower high. Yet again. Back to the floor. If we cut through, 50 is probably the target. Right down here. We've had that target for couple years now. I've been expecting it to come down there. Just drop the rope. Let it go. So gold is now here's the quandary, if you will. So gold is sitting up here at redonkadonk levels, for lack of a better term. Absolutely crazy expansion higher. At this point, we've pushed the limit on how high I thought we might go off of this bounce. Could it be this is a midst of a wave 3 or just a blow off 5 in a wave C and things are just getting a little out of hand? Either way, like, everything's still valid here. This can still do a big fat correction. Now the softness coming into uncertainty is a little concerning to me. This means that it might be a sell freaking everything liquidation type event. There may be no immediate safe havens. It may just be we took this sugar honey iced tea to ridiculous levels and we need to just sell everything and reevaluate. I mean, that's kind of what we had back here in April. I mean, initially gold even sold off before it climbed back and made a high. And it was not an insignificant pullback either. Initially, that baby went down 7%. People love to forget about the fact that gold usually goes down the toilet with everything else, at least for the first few days. 7%. It just did the same thing we did back in April, put us back to 3,600. If we did something a little more spicy, twice as big, put us right back down to the target. Let's be careful out there, everybody. Bitcoin. Danger. Unfortunately, check this out. Hey, thanks, Carlene, for being a channel member. That is not good. That rejection of that level is no bueno. Not good. Really, really, really makes me question the current bullish potential, because this can extend lower in a big way here. We're talking about the potential to be down that high, that low, that high, right down in here in quick order. Right down there. Be careful out there, everybody. And Ethereum, not much clarity, but I did mention that we were probably likely, since we came all this way, to go ahead and finish this up, hit the roadmap line right down here. 35, 36. Oh, that's cool. What was that? I have no idea what that big pop-up was. That was weird. Anyway. Sorry about the big black bar there for a second. Global liquidity preparing for a little bit of chaos potentially here. So watch for this to come back. Hold. Hold. Or fold. So right now we are sitting on 111 trading days. 111 trading days without a 2% pullback in the S&P. That is pushing us to kind of, it's not really record levels, but usually, typically, the longest runs all end about now. There's only 2 instances where we pushed it further. One in 23, 24, running up into the carry trade blowout that happened on this chart back here in the summer of 24. When this thing happened, right there, you're running into that. We set like a record 300 and whatever days. I think it was the second longest run. The other longer run happened in the mid 2000s, 2010s, I think, something like that. Maybe it was the before 28. I don't remember. I'd have to go look at the other one. The other, basically 300 for 3 to 400 days. And then we got that. We're sitting at 111 now, and see what happens. See what happens. Dollar coming back to retest. Weekend holder. And this looks set to pop right there. Now, a popping dollar does put down pressure on a lot of assets priced in dollars, because those assets are getting more expensive versus other worldly currency. That's the economic reason for that to happen. Correlated when they're correlated, not when they're not. All right. Just because the dollar pops doesn't mean the stock market, the US dollar, US dollar denominated S&P 500 NASDAQ is going down, or gold is even going down necessarily. It does potentially put pressure on those to go down, but correlated when they're correlated, not when they're not. 100% of people that confuse correlation and causation eventually die. Think about it that way. Is that correlated or is that causation? So, Apple just parked. Hadn't really moved in a few days. That has potential to come back down to the roadmap line and then could go even deeper from there. Amazon retesting the roadmap line. If we don't hold it, very real possibility we take another detour down here. Could this all be the excuse? This government shutdown be the excuse to flush this stuff back out? Set us up again? Possible. Google. So I don't know. Like maybe the log mode chart was the chart. Like maybe we tagged the 1618. We're coming back down and we're going to retest the breakout. If log mode need to be on, further upside 263 and support down here at the breakout 207. Then roadmap line below that. And all of this could come together some point out here and before we go higher again. Meta coming on down. What the heck? So we're getting below the breakout for a second time. This is a red flag that Meta is going to come down here and hunt for support. Won't, as in A, B. Oh, I'm not drawing good today. My mouse finger is like a little stiff. ABC, potential right there. Microsoft still has potential to come down to the breakout area vicinity. If we get below that down here, it's the same thing I say every morning. All right. If you're new here, let me know. I'd love to welcome new people. New people, welcome. We don't get a lot of new people necessarily, at least not that hang around. I'm a little more technically advanced. I had a conversation with a dad at Scouts last night that he was like, I just want to get started. It seems like what you talk about is pretty advanced. I have no idea what you're talking about. I was like, yeah. Beginners, not really even though I need beginners, I'm a little more technically advanced. Hate to say it, but this is a very simple pattern. Like I can just cut through the crap. Maybe I should make some starter videos for all this stuff. What do you think? What do you think? Let me know in the chat. NVIDIA grinding those highs. That's 1, 2, 3, 4, 5, 6. Watch out for that to drop out. Tesla saw saw millions of dollars of calls. Millions of dollars of calls yesterday. Only dwarfed by the VIX calls that I saw. I think I saw $1 million, like this is people spending millions of dollars to buy calls. all the way up to 550, all the way out to January 2026. It's like, what expiration? You know, just go load up the. What if I still have the platform up? Let's see. I do. Let's see. Let's see. So we dive in here and look at the open interest. And you can see these big chunks of calls. But when we scroll up in here, look at that, 20,000 calls at 500. That's for October, November. Go rolling up in here. 68,000 calls. I mean, holy bananas. Holy banana sandwich. Roll into December. 528,000. 7,000. I mean, these are not insignificant numbers of calls here. Look at that, 16,000 set up at 600 into December. Think about that. $12 a call. That's $1,200 each. $1,200 each. 16,000 of those. Are you kidding me right now? 9,000 up here at 700. There is some ridiculous stuff going on. Look at that. 15,000 at 800. Out to December. And somebody believes in the church of Elon, I guess, right there. Now, look at that. 40,000 at 960. Jeez. Holy cheese and crackers, Batman. Ridiculous. 30,000 at 500. Out to January. Another almost 30,000. This is the open interest. These are contracts open. Like, somebody has bought these. Somebody has bought these. Jiminy. Another 30,000 at 960. Somebody somewhere. There's you can't open a contract without somebody being a buyer and somebody being a seller. You know, maybe the market maker, but the market maker is going to try to offload that to somebody else. So, and then the other crazy, absolute crazy bananas stuff I found yesterday, right here. That number right there. 150, like yesterday that was like 7,000. Today it's like 150,000. Somebody bought those 32 strikes. 2 big block orders went through for like 100, and, you know, add them together, it was like 150,000 contracts. Do the math on it, roughly $12 million between the 2 orders. They were aggressive on it too. It's crazy. Shenanigans going on here. So, anyway, Netflix. Look at that. Wrong, we might be right, but took way longer than reasonable. And it could go down here. That's, you know, lower low than that A. That's the only thing I really need to see. And then Netflix can go higher again. So CoreWeave, top of the charts today. Still sitting at the danger zone. They were announcing some giant, $14 billion deal with Meta for hosting some of their AI infrastructure. How can we play the VIX without taking such a big bet? There you go. So VIX pops, from, let's just take a look, see. You got to understand all the rules of the game here. So if VIX were to pop from 16 to 32. That's 32 is where that big position was, right? That $12 million buy. So if we go from 16 to 32, whoop, how big a move is that? It's a double, right? Like it's 100% basically. So how do you take advantage of that? Well, you can go buy some inexpensive VIX, but VIX is kind of ramping up. But that's the thing. It'll never be cheap when you need it. UVXY, on the other hand, this baby, when you read it, says ultra. In case you're having a problem understanding what the word ultra means, 2x leveraged. So VIX goes up 100%. VIX equals 100% gain. This guy, 2x is that. 200%. That's why I love these things. So 10 bucks goes to 30 bucks. Oops, 30 bucks. So go the right bucks. This. Dun, 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 dun. Is it guaranteed? You know. But right there, right around 200%. Would be where we might go. Has it done it before? Yeah, that was almost 200%. Back there in April. So, how do you take advantage of this? Well, I don't suggest playing options on leverage, but honestly, this is how I made a bunch of money during COVID. If you're concerned about this being a problem, I would fly out here at least a few weeks. May and October expiration, if not the November expiration. You got to take your pick, weapon of choice. Come in here. Calls are not ridiculous, right? We're looking for a move to 30. Anything in here. Yeah, I'm on the October normal expiration. You can go out to Halloween if you want. Halloween, but they're more expensive. You can fly out here to the May November expiration. It's even more expensive to play. But one thing that's interesting here, the strikes only go to 27. And 27 and 17, there's not a lot. Like, that's a lot of implied volatility all the way up the chart. Right there. So you could buy a 17, call. We're talking about calls here. Buy a 17, sell a 27. UVXY. Buy that one, sell that one. Cost you about 50 cents per contract. That'd cover the majority of the move up right there. Now, if you want to get a little spicier, we come on down closer to the money. Get you a 12. Sell the 27 against it. Going to cost you closer to $1. And buy the 12. Sell the 27. Net cost you about $1. But what's the benefit here? Difference in strikes, 27 minus 12, 15 bucks. So you spend $1 to potentially make 14. If we pop all the way through 27. Right there. And that's how you can play. Now, you can just go flip side. That caps your risk at 14x return. Flip side, different way to play. This costs about $1. Buy 16s. There's a lot of 15s right there. Somebody bought. Buy something right in here. Same risk. Spend about $1 a contract. Upside, no longer limited. We go to 32. $16 upside. And if we went from 16 to 32, well, we just went $16 in the money. You spent $1 to get there. $15 reward. You just made bigger reward than if you bought the spread. That's just straight up buying the 16 right there. So I can't say what's right for you in your account. I don't know what your tolerance is for this stuff, how you think about it. I tend to buy these kind of cheaper ones in here and let them roll. Now, very often we get a spike. Got to go back to the chart for this. Never happens in one move, right? We get a spike, we get a pullback, we get more spike, we get more pullback, we get more spike, we get more pullback. The key to playing this, book profits on the spikes, add back if you think this is going to continue on the dips. This is a daily chart, so this is, you had days in between your decisions. This is not day trading. Sell out here, buy back here, sell out here, buy back here. In case nobody's ever seen this before. I'm sure there's lots of people that haven't seen this. Let me, I gotta go be on another show here. Trying to find it. Here it is. This right here. I bought in and out of UVXY and VIX during COVID. And this is before I was a guru. I had this on a chart. Like I shared this daily. Like I was buying 117, exiting 7, buying back 5, selling 110, buying back, buy back 60. You got to keep track of these, all right? At the top, I had 140 contracts of 55 strike VIX calls. I had $20.25 profit in each of those. 140 contracts. All right? I was a big player. That trade right there, maybe about a third of the money I made, like $500,000 in this set of trades right here. I started with UVXY back here, and this is actually the UVXY chart. It says it right up there, UVXY. I was charting the move on UVXY and playing on VIX. All right, everybody. Bias for the day. Caution. Probably just turned sideways a little bit. Here's the setups for today. CSX, DDOG, HIMS, LINC, UTI, WTRG. I'll be on opening playbook here in just a minute, and then I'll be on Market Masters at 11:30. We'll go over more stuff. Hate to cut it short, but I gotta go. I have a commitment for the company to go be on the other show. So have a great day. 30 minutes of awesome. Comes up at 5 p.m. We'll go through even more stuff.